Hi there and welcome to Who Moved the Market. It's Friday. Typically on Fridays, Nigel, my friend, and I, we discuss about what's the post-work plan like, what's happening over the weekend. We haven't had any chance to do that today, Nigel.
Well, that's actually, Surabhi, it came out of nowhere as well, right? I think day on day we were discussing what the Fed is going to do. Out of nowhere, suddenly there is talk of a banking crisis. Normally we were talking about, what we're going to do on a Friday evening, what's the post-market scene looking like. But today, in fact, it's a worrying session because there's been no real bounce in the lows. And we just got 90 minutes to go. And we're virtually at the low point of the day. The banking stock is very, very hard now.
Absolutely, absolutely. We were completely prepared to talk about the US jobs data, the non-farm payrolls report. That was going to be the big talking point, really. But as you're saying, there is this US bank that's stolen the thunder in terms of global financial headlines. So very, very quickly, just to tell you, what's happened in case you've missed the story so far. And if you're simply wondering, why is the Indian market down so much? The Indian market's not the only one. Almost all major markets have been sulking and they've been down. And it all started with Wall Street. Now, what happened was, forget the interest rate talk, the yield talk, the dollar talk, all that's been going on for several weeks. Yesterday, we got to know that there is a mid-sized bank in the US. It's SVB Financial. SVB stands for Silicon Valley Bank because it lends to a lot of companies in the Silicon Valley. This bank has gone ahead and sold a bulk of its bond portfolio. They've sold securities worth $21 billion. And they've done that at a loss of $1.8 billion. And I think, Nigel, that really got people worried, saying, why this desperate move? Why have they sold? That too at a loss. Now they need to plug this hole. Hey, what's going on? Words like default, liquidity stress. Why are you doing distress selling? I think that caused the panic.
And that's coming back after a while, right? We haven't heard the D word for a long time. And what happened was, the other bigger banking names that maybe have a far stronger liability franchise, they as well took a knock. In the top four banks, they lost $50 billion in terms of market capitalization in a single session. I don't know, Surabhi, but you'll be wondering what can turn this around. So let's try to look at what could possibly happen on the positive side. I'll tell you what. The Nifty, maybe you pull back 50, 60 points today. And hopefully you went closer to around the 17,450 odd mark, which will be above the 200 DMA. So that'll be point number one on the wish list. The second factor is maybe the jobs data is not as good as anticipated. And weak data isn't
Weak data is good data these days.
It's good data these days because, that'll be something that maybe puts the Fed in a bit of a spot of bother. Because as of now, the traded numbers that you have, the odds are that we get a 50 basis point hike. So that's one. And the third factor I'm just looking at, if there's a banking crisis, will the Fed be so aggressive? Will that stop them in its path? I don't know. These are questions out there. So if you're looking at positives, then these could be the positives, out there. Nifty recovers 50 points from the day's low. The jobs data is not strong as I expected. And this banking crisis puts the Fed a little bit on the back foot in the near term.
I guess sometimes the problem with markets is, and that was my reading during the middle of the week when we had the first statements from Mr. Jerome Powell saying we'll probably need to hike more, we'll probably need to hike more aggressively and more frequently. And the Indian market managed to put all of that aside, and we had a very nice, relief rally. In fact, a strong, resilient pullback. But that's my only point, that these things don't sort out overnight. You'll keep getting choppiness, and that's exactly what's happened. Even with this bank, this Silicon Valley Bank, there are so many missing links to this puzzle that's just about to unfold. What will their depositors do? What will their shareholders do? The stock crashed 60%. Will people come in to plug the gap? Can they raise equity? What are the other connected institutions? Because, Nigel, I remember, and this is where it's like hair-raising memories come back, right? 2007-8, we were much younger, reporting on the market. It just starts in a very innocuous manner, not trying to scare anybody, not drawing parallels. That would be wrong to do right now. That was a once-in-a-lifetime event. But it's just that these things have a habit of unraveling in bits and pieces. Usually it's not a very clean thing. I'm really hoping this time it's going to be different. And then the scenario that you're talking about gets to play out. But yeah, I mean, as of now, the good part is that we haven't really crashed through the lows. There's been some attempt at holding the low.
There is some attempt, Surabhi, out there, but it pales in comparison to the kind of selling that you've seen. I'm just looking at the non-equity cues as well. The dollar index, it was looking like it was going to run away. It's cooled down to around 105 the last time I checked. Brent crude prices, because of recession fears, they're below $81 per barrel. So those are, in a sense, Indian market positive. So let's hope at least there is some kind of rub-off from there. And remember, the recent low is 17,255. The bulls will be hoping that we defend that mark. And just one more point, ultimately, it's going to be all about earnings, right? So the Indian markets have underperformed this year, which may not be such a bad thing, because you had markets that were off to the races earlier this year, whether it was the developed markets, whether it was the Chinese markets. MSCI China index, in fact, has corrected 15% from the recent peak. That's less than 45 days ago.
Yeah.
So the Indian markets has been in that sense relatively more stable. If earnings is going to come about, maybe you see a bit of correction in the Indian markets, but at 15 and a half times odd, the odds are that the Indian market sees a good amount of flows coming in.
Yeah, well, for starters, we really need the global situation to stabilize, and then we can work ourselves up from there. It's actually time to bring in a special voice onto the show. Let me quickly welcome Mihir Vora. He's joining in, and we'll discuss some of these nuances with him as well. Mihir, welcome to Who Moved the Market. And thank you so much. This is very special because you are our debut guest. Till now, it's been, a bunch of us people internally discussing cues and stocks that matter. So very, very, very glad to have you on our digital first show.
Very happy to be here, Surabhi, and all the best for this new show. And happy to have you back on TV.
Thank you so much, Mihir. So, I hate to start on a Friday, that too with this downbeat, conversation, that too when we're talking after a long gap. But it is what it is. So you tell us first, this whole SVB financial situation, bond losses, by the way, they had a huge amount of mortgage-backed securities in their portfolio, which weren't yielding them anything when the US 10-year is, where it is. But it just starts making you feel a little nervous and jittery. Do you think this is a passing phenomena, or do we really need to tread with a lot of caution now?
No, I think it's broadly a function of, the fact that the yield curve in the US has inverted, which is usually a sign of, a slowdown coming. And typically what we have seen is that whenever these yield curve inversions happen, there are going to be some institutions which are running the asset liability management the wrong way. And I think as Silicon Valley Bank example is more of an ALM issue rather than an asset quality issue. And if they manage to get the capital that they have announced raised soon enough, it's a large bank, so hopefully there won't be a big issue on capital raise. If they manage to get that capital, then it should be fine. But point is, there is never one cockroach. Typically when you have this kind of a stress situation where the yield curve is inverted, there may be other small institutions, so you may see some minor bad news continue. So to that extent, I think we are in a bit of a flux as of now globally.
Okay, all right. Yeah.
And Nigel, I was listening to you before I came in. Be careful what you wish for. You almost were wishing for a bad jobs number.
All right.
But isn't that how it works? These days, when you get weak data, the market ends up rallying, saying, okay, finally the Fed will relent. Fed is not going to, go all out, all guns blazing, right? Isn't bad news good news these days, Mihir?
For in the short term, yes, but in the long term, what happens after 3 months?
Mihir, sometimes you're having your first drink at around 7 p.m. your India time, and suddenly that jobs report comes about, and you have it flashing for you on the screen. Dow futures down 500, 600 points. Boom, you don't know whether to call for the second drink or not.
You have to, right? You have to.
It's Friday at the end of the day. So.
All right. Mihir, if I were to look at one positive from the Indian markets, when you have the Bank Nifty down 2%, you have the Nifty down more than 1%, but the advanced decline ratio is not that bad today. You have less than 2 stocks declining for 1 stock that's advancing. And after seeing a correction, yesterday we were down a good percent, today we're down. So you're having 2% gone on the Indian equity markets. And you're seeing the breadth of the market that's not bad. That's telling you there is some kind of buying interest as well in the broader markets. At least that's the sense you get. One would have been waiting for a correction. Maybe this correction is coming now. But our viewers would like to know, what do you buy from here on? So any sectors you would like to look at in particular?
Sure. This, breadth versus the large caps probably is a function of FIIs buying and selling. We have seen that FIIs have been selling, but more importantly, a lot of action is happening in the Nifty futures also as far as FIIs are concerned. So typically when they're trying to exit or sell some stocks, they also hedge in the futures, and we have seen large movements in the future positions in the last few days. For example, when the markets went up 3-4 days ago, there was a huge amount of short covering that we saw in the futures. And similarly, yesterday, there was a huge amount of selling in the futures. So, and these are all large caps. So this delta between the large cap movement and the broader market is a function of FII movements. And domestic institutions and HNIs and retail do tend to be more on the mid cap and smaller cap. So maybe we are not seeing the selling pressure there.
But Mir, what do you buy then? Do you is there something that some particular sector that you would think with a little longer time horizon, say a few years, that this dip is providing entry opportunity?
Sure. So I think broadly speaking, we are playing the domestic theme more than the global theme. So all the global segments like commodities, energy, metals, etc., even IT for that matter, we are not playing that aggressively. We are underweight. The rationale being that whatever happens, I think the next 2 to 3 years we'll have India outperform the rest of the global economy as far as GDP growth is concerned. Probably even better than China. So we would stick to domestic segments, and I think banking is a clear winner there. No asset quality issues as of now. Maybe some slowdown, but we'll see. We'll take it as it comes. But as far as margins and asset quality is concerned, there's no issues. And the other big thing that we are playing is the infrastructure, capex, PLI, defense, manufacturing, the manufacturing basically. Because if you have to grow at anywhere about 6.5-7%, above 6.5-7%, then you cannot have it without infra and the investment cycle, including real estate, doing well. So that's something that we have to bet on if you are betting on the Indian growth story.
Okay, got that, Mihir. By the way, I hate to point this out, but markets around the world are still reeling under pressure. By the way, the Hong Kong market ended down 3%. A lot of European markets right now trading down 2%. So if you compare us with this performance, and obviously India is much better off today. Mihir, let me ask you to jog your memory to actually not very pleasant times. But, the last time we've had a global situation, a global crisis, every time this whole debate comes up about decoupling, and no one's doubting the inherent strength of India and the Indian economy. But in the short term, at least in the past, money starts drying up. The flows are not what they have been. Will it be different this time around, do you think, if at all this gets into a more prolonged problem in US banking?
So it's a question of short term versus long term. In the short term, if you are going to see a lot of FIS selling, then obviously it will impact the markets. But the question is, will we rebound faster than the rest of the world? I think we will. So to that extent, we have seen so many crises. Sometimes the corrections are 15%, sometimes even 40%. But India has ultimately ended up outperforming the rest of the market, including China, which has grown GDP at a faster rate, but the markets have not given returns. So the volatility will be here to stay. We cannot ignore the fact that FIs are significant players, though less impactful as 10 years ago. So maybe the FIS selling impact will not be as pronounced as last time, but one cannot rule out that impact in the shorter term. Question is, do we bounce back? And I think we will.
Okay. So you mentioned a couple of themes. You mentioned the whole capex theme. This is obviously for people who are willing to really stick along for the medium to long term. What else? Typically in these times, you have pharma doing well, you have IT doing well. There are traditional defensives, but I don't know if those traditional definitions work, if they still stand in the present context. What's your sense?
Certainly not. In both the segments that you mentioned, pharma and IT, there is global pharma has continuous, it's not up for 6 years ago. And in IT, I think what we saw pre-2020 was a steady growth. It was supposed to be a high single digit or low double digit kind of a growth segment. But this COVID-linked tech spending did provide it a boost for almost 2 years. But I don't think we can extrapolate that. If the US is to slow down, maybe even go into recession in the next few quarters, then corporate spending in the US on tech will come down. And we have seen the order book accretion slow down. So while we are seeing good quarter-on-quarter growth, that's because of the order book, which was built up, say, 6 months or 12 months ago. But if you look at the incremental quarters, sequential quarters, the order book accretion is slowing down, which means that in the future, say in FY24 or FY25, the growth rate will definitely not be as high as 21 and 22. And valuations are certainly much higher than what we saw from the pre-COVID level. So I think IT can see some headwinds.
All right, Mihir, you spoke about infra. I'm just looking at a domestic theme that has done well has been the power space. We're bracing for a scorching summer. Whether you look at direct or indirect plays, they've done quite well. JSW Energy, high merchant sales, IEX, hopefully you'll see higher volumes out there. That's the hope. The stock has reacted. And some of these other, consumer durables stocks as well have done quite well. How would you approach this theme? Obviously, we don't want that scorching summer, but if it comes
We're
about...
getting it anyway, Nigel. There's no escaping it.
But, is the PAR space in particular, is that a space that you like? Is there an indirect way of playing it? Maybe a PFC that's done very well. It's hitting a fresh 52-week high as the markets see a downtick as well.
Certainly, it is a tactical call. All the names that you mentioned are tactical calls. But in general, we are not that heavily, in favor of utilities per se. Because beyond a point, there is always a cap on the amount of margins that the consumers or the government will be willing to, let them make. So to that extent, it's always going to be a politically regulated sector, socially regulated sector, and extraordinary margins cannot be made for a sustained period of time. The true driver can come from volume growth, but we are not seeing that kind of capacity addition in most of the places, except in the green energy space. So wherever there are green energy things, those are the places, those are the stocks that we are trying to play, because there definitely we are going to see a lot of volume growth, whether it's solar or wind.
Okay, all right, Mihir. We will let you go on that note to conclude the rest of your day. Thank you very much for joining. And I'll just wish this, no matter what that non-farm payrolls number does, what more headlines come out of SVB, we're hoping that you can go ahead and have your first, second or third drink and enjoy your Friday evening.
Mihir, we know who's got three on their mind. It's not Mihir or Nigel. Thanks so much for joining in, Mihir.
Thank
That was great one.
Thank you. You too. Thanks very much. I know that Nigel is not going to be too bothered at least about that non-farm payrolls number.
Ways.
Someone's leaving on a jet plane very soon, right?
Absolutely. It's a long-awaited trip, Surabhi, and I hope you'll track, the crisis and all of that. But my dukaan shuts today.
Well. It's a well-deserved holiday, so make the most of it, and we'll try and keep things stable for you for when you get back.
Do your bit.
All right. Thank you very much for joining in. That's where we take your leave on this week's edition of Who Moved the Market. So we're calling it a wrap on this Friday. See you again on Monday, same time, same place.